day, students. Welcome to class time. I am Georgetta Thomas Legister, your CSEC Principles of Business teacher for this session. And today, we're going to look at financial institutions. Now, before we get into our lesson today, we want to do a brief recap of what we looked at last time. Who remembered the last topic we looked at? Yes, we looked at logistics and supply chain. So before we get into our financial institutions, we will be doing a brief recap of logistics and supply chain. So come with me to the smart board. Now, so remember last time we spoke about the logistics and supply chain, and we mentioned that logistics is more than transportation, right? So what is logistics? What did we say logistics is? Now, logistics is a process of planning, implementing, and controlling the efficient, cost-effective flow and storage of raw materials, semi-finished goods, and related information from point of origin to point of consumption for the purpose of conforming to customer requirements. Now, we also spoke of the supply chain. What did we say the supply chain refers to? Now, the supply chain is a network between a company and its suppliers. Now, remember that there are 4 interrelated operations in the supply chain. What are they? So we have the producer or the manufacturer. What comes next? The wholesaler, the retailer, and the consumer. Wonderful. Now, we also looked at some key components of logistics, and I'm sure you remembered them. So we looked at procurement. What did we say procurement refers to? So procurement is a process of finding the right price, coming to terms and conditions, finding the right supplier. So it's a process that you take before making an actual purchase. Now, we looked at inventory management also, and we did state that you need to manage inventory so you don't overstock and cause loss or wastage, and you do not understock because you want to be able to supply the needs of your consumers, right? We looked at transportation and how important transportation is in taking raw materials to the factory and taking finished products on to the consumer. We looked at warehousing, and we looked at the fact that warehousing served an inbound and an outbound function. Wonderful. Now, we also looked at the modes of transport within the logistics and supply chain network. We looked at their advantages and their disadvantages. So just a recap of those modes. So we looked at road, rail, pipelines, air, marine, or sea transport. Now, a key point to remember is that logistics can improve competitiveness by meeting the increasing demands of customers at the lowest possible cost. That's the aim of business, is to cut cost, right? Now, logistics can achieve comparative cost advantage primarily through outsourcing. Anyone remembers what outsourcing is? Right. So outsourcing, in our layman terms, is to contract out a section of your business. And we said that we can outsource transporting. And this allows the business to focus on their core activity. So if your core activity is manufacturing, then you allow someone else who is an expert at transport to get your goods to your final consumers. Wonderful. So that's our recap. So now we're going to move into our lesson for today. What did we say that lesson is again? Right. So I'm hearing financial institutions. Now, at the end of this lesson, you should be able to define accurately the various financial institutions that we will identify. Describe the functions of each financial institution. State the services offered by each financial institution. And describe the relationship between the central bank and commercial banks. So get out your book and your pen and let's go. Now, What is a financial institution? Think about it. I want you to record your own definition of what a financial institution is. And when you hear the term finance, I'm sure that money comes to mind, right? Money is something that we use on a daily basis. What is a financial institution? Now, most countries of the world have a similar system that is made up of banks and non-banking institutions, government regulatory bodies, investment institutions, and insurance agencies. Now, can someone tell me what that system is called? What is that system referred to as? Now, we refer to this system as the financial sector. I'm sure you have heard that term before in a lesson that you did, right? So we refer to this system as the financial sector of a country. And all entrepreneurs, including yourself, your young budding entrepreneurs out there, all entrepreneurs must learn about business finance. And the best place to start is by understanding the main financial institutions within the financial sector. Now, the first financial institution we will explore is the commercial bank. What is a commercial bank? I'm sure most of you are account holders. Now, which institution do you bank with, right? What is a commercial bank? So the term commercial bank refers to a financial institution that accepts deposits from households and businesses, makes various loans, and offers basic financial services to individuals and businesses. And here we have some examples of commercial banks: Scotiabank, National Commercial Bank, First Global, to name a few. And of course, you can go ahead and add others to the list. Now, the functions of commercial banks. Now, in the definition, we saw coming out deposits and loans, and they will come out again in the functions. So the main functions of a commercial bank are to accept deposits and to give loans. Now, the bank will pay a percentage to the depositor as interest or gain on your deposit. So what this is saying is that if you have an account with a commercial bank, you get interest on your deposit. Now, the longer you allow the money to stay in the account, the more interest it will accumulate, right? Now, remember that the bank is a business. So they operate at a profit, right? So there's an interest charge or a fee that is collected from each borrower for loans. Now, as the needs of society grow, commercial banks have created many services that help to fill these needs. But I want you to pause for a minute. Has anyone recognized that an interest can be both a reward or a charge? Right, so remember first we stated that you get interest on your deposits. That's a reward for saving, right? But you also pay interest on your loan, right? And that's a charge. So this is an additional fee that you pay with your loan payments. Good? Now, there are many services that are offered by commercial banks. A number of services. I want you to state some. What are some services? When you go to your commercial banks, what kind of service do you access from your banks? All right, so tell me about it. Good, so let us explore a few of these services. Now, as we said earlier, one of the main functions of commercial banks is to accept deposits. So commercial banks accept deposits which are placed in either savings accounts or current accounts. And the current account is also known as what? Yes, a checking account. All right, so let us explore. What's a savings account? So basically, a savings account is an interest-bearing account, right, that individuals and businesses use to put away money in a safe place. You want to know that your money is in a safe place that you don't need for immediate use, right? So remember now that that savings account, it attracts interest. So you get interest on your deposits. Most of us have savings accounts, right? Now, a current account, otherwise known as a checking account, earns less interest, a little less than what you would earn on your savings. But the account holder can transfer money by writing a check. So if someone writes you a check, it means that that person has a checking account with their local bank. Now, money can also be deposited in the form of foreign currency. So not just the local currency, but also in the form of foreign currency. Now, another important service offered by commercial banks are what we call credit creation or loans. Now, from time to time, all of us need backup. We need to borrow in order to get some business done. Now, how is it possible for the commercial bank to lend money to people? Where does all this money come from? Now, this is made possible by the many deposits received. So all the depositors' money goes into a pool. So it's possible that because you have some money in your account, I am able to get a loan, right? Now, a portion of the total cash deposits that is referred to as the cash ratio is kept at the bank, and the rest is lent to others. And of course, you remember that if you access a loan, you pay back with what? Interest, right? Now, transmission of money is also another important service offered by commercial banks. Now, the bank transfers the depositor's money as instructed by the depositor, and this is called a standing order. So let us pause a minute and talk about the standing order. You know what a standing order is? Right, so a standing order is basically written instruction from an account holder to the bank to carry out a transaction on the account holder's behalf. So for example, you could use a standing order to ask the bank to transfer a particular sum of money from one account to place into another account on a specific date each month. Now, when you use standing orders, it's most suitable for amounts that do not change over a period of time, right? So it's the same amount that will be taken from one account to another on a monthly basis, normally on the same date each month, right? So you have to ensure that money is in that account in order for the transaction to take place. Now, the depositor can also ask the bank to accept deposits into their accounts from other sources. And you know, with technology now, so someone can go to the ATM and lodge money to your account. They can lodge money from the comfort of their homes using online banking, right? Now, the bank also facilitates the use of checks. Of course, we talk about the checking account, the current account. The credit and debit card services are also offered by commercial banks. Now, advisory services. From time to time, we need some financial advice, right? This can be provided by our commercial banks. So these include advice on insurance. So you want to know what policy will be best for you based on your circumstances. Your agent at your commercial bank can give you such advice. Trusteeship. Any idea what that means? Right? So legal documents, you're talking about writing up a will to determine who gets what upon your death. Unfortunate, but it's reality, right? Now, investment management. So you can get advice on how to invest, which business to invest in, which company to buy stocks in, when to buy stocks, when to sell stocks, because they are the expert and they can give you financial advice to benefit you, right? And also, you can get advice on taxation. So entrepreneurs and other business persons, you're not sure how to file your tax returns, what to do with the amount that you take from your employee's salary, then you can also get advice on taxation. Wonderful. Now, safety deposit boxes. Now, these are special containers used for valuables and documents, which are kept by a bank in a small room or a vault, right? So it's kept safe. You have a key to access, right? And of course, if you're accessing a safety deposit box, it comes at a cost. It's a service offered by the bank. So of course it comes at a cost. So if you have something of value that you fear keeping at home in the event of a break-in or some natural disaster, then you might consider utilizing the safety deposit box at your commercial bank. Overdrafts. Have you heard that term before? Overdrafts, right? Now, this is basically permission given to a depositor to withdraw more than the actual amount in their account, right? Now, you have to be careful if you're accessing an overdraft, and this is mostly given to businesses as opposed to individuals. However, there is a specific time period for repayment, and after this date, after this time period, a very high rate of interest is charged. So you have to be careful. If you're given an overdraft, ensure that you repay on time and in full to avoid high interest charges. Now, the commercial bank also issue notes and coins. Now, they issue notes and coins in the local currency and can also buy and sell foreign currency. So if you want to exchange your US dollars for Jamaican dollars, that can be done at your commercial banks. And if you also want to exchange your US dollars for Jamaican dollars, then that can also be done at your commercial bank. Clearing of checks. So we spoke about current account, checking account, right? So what is this really? Clearing of checks. Why do we need to clear checks? What is this talking about? Now, commercial banks clear checks that are drawn on other banks by accepting the various checks and then ensuring that these are passed on to the relevant authority. Now, this system is called the clearinghouse system. So stick a point. Now, this system is what allows you to be able to deposit a Bank of Nova Scotia check to your NCB account, right? They're different institutions, but the interbank transaction is possible by the use of the clearinghouse system. Now, if you talk to your parents or an adult in the house, sometimes you might hear them use the term that the check is not yet cleared. What does this mean? So you lodge a check from one institution into another account, then you might not be able to get ready cash from that check immediately, right? So you might hear that the check needs 3 to 5 working days to clear. Now, this is to allow the check to pass through the clearinghouse system. So they have to do their checks and balances. Remember, it's different institutions that you're dealing with, right? So they have to do their checks and balances to ensure, for example, things like enough money is in the account holder's account to cover the amount on the check, to ensure that the check is legitimate, it's not tampered with, it is signed, and it is in good order. All right, so the clearinghouse system is what allows you to transfer checks between institutions. So that was a commercial bank. Now, we're going to move on to look at the central bank. Right, now, what is the Central Bank of Jamaica? What is it called? Right, so I can hear somebody at home saying it. So the central bank is what we call the Bank of Jamaica, commonly known as the BOJ, right? Now, if you take a look at the monitor, you will see a statue standing tall at the front of the Bank of Jamaica. Any idea whose statue that is? Right, so think about it. Let me hear you. Right, so that's Noel Nethersole, dubbed the father of the central bank. So you can do further research to find out more about Noel Nethersole and a little history of the central bank. Now, in addition to that, the central bank, the notes and coins that we use are sanctioned by the central bank. So we know that the money that we use, it is legal tender because it is sanctioned by the central bank. Now, I normally ask my students to take out the notes that they have, right? So any money you have in the house, wherever you are, if you don't have any, just ask somebody to borrow a note. You have a look at your note, you will see the signature of the governor. So, who is the governor of the Bank of Jamaica? All right, so let me hear it. So I'm hearing 2 names. I'm hearing Richard Biles, and I'm also hearing Brian Winter. So who is it really? Right, so if you look at your notes as I instructed, you would see the signature of B. Winter, Mr. Brian Winter, right? He's the outgoing governor of the Bank of Jamaica. So you might not be able to see Mr. Richard Biles' signature as yet. His signature might be on the newer notes because he has been newly installed as the governor of the Bank of Jamaica, right? So the Bank of Jamaica is very crucial in our economy. Now, definition of the central bank. What is the central bank really? Now, this is a national bank that provides financial and banking services for its country's government and commercial banking system, as well as implementing the government's monetary policy and issuing currency. So our currency is issued by the central bank, Bank of Jamaica, right? Now, the central bank does not offer banking services to private individuals. So I wouldn't have a savings or a current account at the central bank, right? Neither does it offer banking services to businesses. It is a government institution that carries out certain functions. Any idea what functions the central bank carries out? Think about it and write them down. All right, so let us explore. Now, the central bank is responsible for issuing notes and coins to commercial banks. Yes, so when you go to the ATM and you see those nice crispy notes coming out, looking like they were just manufactured, right? They might be coming straight from the central bank directed to the commercial banks. Now, it will also redeem damaged notes or coins that have been collected by commercial banks. So sometimes we do transactions and, persons are giving us change and the notes look torn, visibly dirty, and the coins have signs of rusting, and you might be hesitant. I don't want any dirty money in my purse, right? So you normally get them from the taxi drivers, the conductors, just about anywhere. They want to get rid of these money, right? Now, however, the money is legal tender. So you can politely ask them to just lodge that one. It will be taken out of the system. When the commercial bank sends it to the central bank, it will be taken out of circulation and replaced with new notes and coins, right? Now, the central bank also serves as the banker to the government and offers services or similar services to the government as those offered by the commercial banks to individuals and businesses. So, let us go back to what we did earlier. What are some of the services offered to individuals and businesses by the commercial banks? And the two main ones we stated were deposits and loans. So similarly, the central bank offer or enable government agencies and the commercial banks to make deposits and also offer loans to the government and to the commercial banks under certain circumstances, which we will talk about later. Now, a trivia question for you. Now, the central bank is owned and controlled by, right? Can you see the options? Now, A, the government, B, the shareholders, C, private sector, or D, the country's citizens. All right, think about it and select your answer. Wonderful. I think you have your answer now. So, if you have A, the government, then you are indeed correct. All right, so the central bank does not have shareholders. It is owned and operated by the government. Now, continuing with the functions of the central bank. Now, it is considered to be the bank of all banks. So, it is a banker to the commercial banks. All commercial banks have deposits with the central bank. Now, this involves holding the cash reserves of the commercial bank, and this is a minimum requirement, right? So the amount of the cash reserves is based on the cash ratio, based on how much the bank earns. There's a certain percentage that must be held with the central bank, right? So the commercial bank is not allowed to give this money out as loans, right? It must be kept at the central bank for emergencies. So emergencies such as, just a large unexpected demand for withdrawals. So people want to withdraw millions of dollars. And because you keep lending money, you might not have enough at hand so to allow for that withdrawal. So persons have to request withdrawals when they want to withdraw large sums. Now, it is also the center of the clearinghouse system and ensures a smooth exchange between the different commercial banks. And we explored that earlier. So the clearinghouse system makes it possible for you to lodge a Scotia check to your NCB account or your NCB check to your Scotia account. Wonderful. Now, other functions of the central bank. Now, the central bank is management of the foreign exchange reserves of the country. Now, to ensure a stable buying and selling rate for foreign currency. So if the country has a fixed foreign exchange rate, then this is set by the central bank. So the governor of the central bank has a crucial role to play in setting the exchange rate or a fixed foreign exchange rate. Now, the central bank is the regulator of the activities of the commercial banks. And basically, what is this saying? So it is saying that the commercial banks, they supervises the activities of the commercial banks. So there are certain regulations that are laid down by the central bank that commercial banks must abide by in order to operate legally. Now, it is the lender of last resort. So I did mention that the central bank give loans to the government and to commercial banks under certain circumstances. So what do we mean by last resort? If I say that I will help you out, but it's a last resort, what does that mean? So basically, it means that after the commercial banks have tried all options available to them to access funds, the central bank is their last resort, when there are no more options, when they're out of options. And it simply means that if the commercial bank reaches a point that it has to borrow from the central bank, then it might be possible that the commercial bank is having serious financial issues. All right, so it is a lender of last resort. Another trivia question for you. Now, which of the following services are provided by commercial banks? So let me see if you're following me. All right, so 1, controlling the supply of money. 2, offering loans to small businesses. 3, accepting deposits from customers. Is it 1 and 2 only, controlling the supply of money and offering loans to small businesses? Or is it 1 and 3 only, controlling the supply of money and accepting deposits from customer? Could it be 2 and 3 only, offering loans to small businesses and accepting deposits from customers? Or 1, 2, and 3 only, controlling the supply of money, offering loans to small businesses and accepting deposits from customers? So think about it. So you should have your answer by now, right? And if your answer is C, 2 and 3 only, then you are indeed correct. So offering loans to small businesses and accepting deposits from customers. Good, so ensure that you record that one. Let us move on. Now, we're moving on to look at non-bank financial institutions. So in other words, these are financial institutions, but they're not banks, right? Any idea what these are? Non-bank financial institutions. Think about it. Write down some examples and compare with what we will discuss. Now, just a general overview. Now, a financial institution is a company engaged in dealing with monetary transactions, such as deposits, loans, and investments. Now, there are a variety of non-banking financial institutions, including credit unions, insurance companies, building societies, and many more. So we're going to explore some of these non-bank financial institutions and look at their characteristics. Now, the first one we will explore is credit unions. So are you a member of a credit union, right? Now, a credit union is a community savings and loans provider set up by a group of people to benefit a particular community, right? Now, it aims to promote the habit of saving. Saving is important. It provides credit at a very competitive rate and promotes other financial services. Now, a little more about credit unions. And let's just recap. Now, I'm sure you have, well, I'm not sure, but you should have looked at the topic, forms of business organizations. Do we remember that topic? Right? So you look at the forms of business organization, the sole trader. Tell me them. Companies. Right. So cooperative falls under that broad topic. It's a form of business organization. Now, a credit union is a form of cooperative. Now, they are run by members for members. So it means that the clients are the owners, right? So it's by members for members. Credit unions are formed by people who have something in common. So something such as living in a particular area or community, those in a particular type of occupation or a form of industry, and members of a particular group or trade union, right? So we have examples such as if you're a teacher, you might be a part of a particular credit union. They have a credit union for teachers. There's a particular credit union for police officers, for community. So if you're from Manchester, you will hear of the Manchester Cooperative Credit Union, etc. Now, insurance companies. And this is another topic that we explored, right? So when you looked at the topic, go back and recall when you looked at the topic of legal aspects of a business. So you would have looked at contracts and insurance or principles of insurance, right? Now, what did we say insurance is all about? I don't understand why insurance is considered a financial institution here. So insurance companies really compensate the insured for any loss or damage incurred. Now, apart from the services insurance companies provide to businesses and individuals to give compensation in the event of losses experienced, they also lend large amounts of money to borrowers, right? So they also invest some of the money. They take in premiums in various forms of business activities, and also in the form of interest-bearing loans to those engaged in entrepreneurship. So the insurance company is not a bank, but it is a financial institution. It accepts deposits and it gives loans. Building societies, these are another example of non-banking financial institutions. So building societies are owned by its members, and they offer financial services, especially mortgage lending. Any idea what mortgage is? Right. So when we speak of mortgage, we speak of long-term lending, long-term loans in order to purchase property. And this property can be a dwelling, a house, or it could be a commercial building to operate your business. Now, building societies, they accept deposits mainly from the general public, on which, of course, they pay interest. See how many times the term interest came, right? So, and in this term, interest here, is it a reward or a charge? So you have a deposit and you get interest, then in that sense, in that context, interest becomes a gain or a reward. So they pay interest and use funds to finance the mortgages. Now, micro lending agencies. When you hear the term micro, what comes to mind? All right, and if you take a look at that image on the screen, it will give you an idea, right? So, humble beginnings, starting from small, just coins, a very small plant, right? Now, microfinancing is recognized as a tool to alleviate poverty. Now, that is aimed at millions of people who do not possess the traditional banking, possess access to traditional banking facilities. Now, this might be because of a number of factors. So it could be that they might lack collateral, they might be unemployed, or they have poor financial record. Now, another term, very important term, collateral. Now, any idea? Collateral. Any idea what collateral means? Now, just to speak of collateral briefly. So there are two categories that loans can fall under. So based on the amount that is required from the borrower, based on the risk involved, a bank or a financial institution might offer a secured loan or an unsecured loan. Now, secured loans require collateral for security, right? So collateral is basically something of value that the borrower puts up in order to access the loan. Now, that might be your land title or your motor vehicle title, right? Now, the purpose of collateral is that the financial institution can sell this collateral in the event the borrower is unable to repay, right? So persons who lack collateral, persons who are, living below a certain standard, they're not earning much or earning at all, they can access loans from micro lending agencies without collateral. Now, for an unsecured loan, basically what supports that is the borrower's credit worthiness. So when you access your go to your financial institution to access a loan, they will check out your credit history. So they will see how well you pay on past and existing loans, right? Now, so they lend small amounts of money to such persons, and it does not only help them to survive, but also aims to encourage self-sufficiency, independence, as well as self-employment and entrepreneurship, right? So basically, this scheme has produced many success stories as it enables people to buy materials to make products by hand and even open small shops. So do not underestimate the micro-lending agencies. I'm sure that you can identify someone in your community who benefited from a micro-lending agency, from a small loan to start up a business and to maintain or to sustain that business. Now, government agencies, there are some government agencies that can also be considered as financial institutions. So government agencies, often an appointed commission, are responsible for the oversight of specific functions for the government. And in this context, we will talk about the Ministry of Finance. So a Ministry of Finance will have overall responsibility for developing the government's fiscal policy or fiscal and economic policy. Now, what is fiscal policy? So the fiscal policy is basically the means by which our government, monitors the spending levels and tax rates to influence the economic stability of the nation, right? Now, the ministry would be responsible for overseeing and regulating the collection and allocation of public revenues, as well as playing an important part in the socio-economic development of the country by creating a society that promotes a better standard of living for all citizens. And this can be done by effectively managing the economy. All right, and that's all the time we have for CSEC Principles of Business.